So the dilemma all investors have at the moment is we're in a period of record low interest rates. Funding costs are at record lows, so it makes cap rates and investment returns look quite attractive as a record spread between bond rates and investment yields that you can get today out of real estate. The real question is what's the sustainability of the income? So how long is that yield going to maintain the level that it's at? That's where understanding the risk of the cash flows is a key focus for Elanor. But that is a key dilemma today across many sectors. The healthcare sector is a great example. It's been proven during the financial crisis where income returns actually not only maintained a stable level all the way through the financial crisis, but they actually grew, as opposed to many other sectors. The same has happened during this COVID-19 impact, where in our portfolio we've had very minimal impact in terms of rent relief required to our tenants, which really supports the underlying demand of the healthcare sector. So it's a sector that you have visibility to in terms of strength of cash flows, that they are not in decline like some other sectors. There are numerous fundamentals supporting the healthcare sector. Firstly, the expenditure growth in healthcare has been 2.5 times GDP for a long period of time. Secondly, the growing population in Australia, which is 2 times the OECD average. Thirdly is the ageing population, which is expected to rise to 18% of our population base from a current 15 over the next 10 years. That, together with the fact that healthcare has a proven track record of providing stronger risk-adjusted returns to other sectors with lower volatility, really gives us rise to that this is a sector that can actually ride through downturns better than any other sector. We've done a lot of work over the last 12 months, 2 years in what part of the healthcare market we would like to invest in. The options you can invest in healthcare range from very low risk, low return opportunities with long WALEs in private hospitals, which are very hard to get exposure to. The other end of the spectrum is having exposure to operating businesses such as aged care. The part of the market that we are really focused on is in the middle somewhere, where we buy multi-tenanted medical office buildings, but medical office buildings that have an anchor tenant as part of the tenancy mix. And what that means is that it actually provides longevity and a tenant base that is very sticky to the building and provides those strong risk-adjusted cash returns.